Morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday morning pre-market webcast. All right, the band ride continues. All right, day 3. We're not particularly stretched versus our 45-day pivot, only about 18 handles above the 45-day pivot. So that's my very gentle way of saying to you that this can keep on going if the bulls continue to come in and buy those dips every morning. I talked yesterday about how, look, the market wants to go up. It doesn't care if you want it to go up. So what happens right off the open? Right off the open, we come in, trades down to the opening area there around 78. And, either you sat there and said to yourself, oh, I can't do it. Just can't do it. Or you bought it. We bought it, and it was a nice little ride. They converted 75 to 79. It traded all the way up into the next area that we were looking at, which was 87 to 89. And I hopped on, early in the morning to say, look, that's a key print there up at 79. If they convert that area, there's going to be trouble. And lo and behold, there was trouble. And all we did in the overnight was, the best we could do was about 82.25, and all that did was confirm the second standard deviation upper band as support, at least so far. And, we're looking to spend a day in the channel here. When I talk about the channel, you've got this gray line here, which is the third standard deviation upper band. And you've got the yellow line here, which is the second standard deviation upper band. Upper band rides like to spend some time in the channel, just like lower band rides do too. Channel, right here. Okay? Same deal. So I would expect, if 82 continues to hold, that we start to reach up into the 90s today. And, whether this tax plan is fiction or fact, it's keeping a bid under the market, and it's giving the market an excuse to reach for higher prices. You can fight it, or you can make money on it. Now, if the bears start to find their car keys today, you're going to start to see some lower highs. You'll see that 82 start to give it up. And we convert daily pivot. We get back into the 75 to 79 area. And if the bears can avoid this being confirmed support, then you start to take a look at, somewhere in the low 70s. Very doable. It's very doable. The issue is, do the dip buyers, are they going to, let things go? Because right now, every short isn't a weak hand, but the vast majority of them are. And when the market gets like this, at the first sign of trouble, all shorts get spooked like scared bunnies in your backyard. And when they scatter, we go and make a higher high. And it's very, very difficult to get any downward momentum that's meaningful until that dynamic reverses itself. So, it just kind of becomes a self-fulfilling prophecy. So you can fight that dynamic, or you can trade along with it, which is what we did yesterday. And if today is like yesterday, we're going to do it again. It's your choice. You can choose to fight price. You can choose to overlay an ideology onto the market, or you can see what price is telling you, whether that's long or short. Define your risk, and and get in a trade that has a decent risk reward. Buying the open yesterday certainly had a decent risk reward attached to it. And we'll see what today brings. All right. Everybody have a good one. I'll see you for the midday update. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.